Hi, everyone. Good MLK Day to you. Everyone see my charts. Hi, Ingmar and TJ, Arena, Brock. Everyone doing okay? I don't know what I did. I hope you could see my charts. So, okay, so if you're wondering why it's so quiet, it's a holiday here, national holiday, MLK Day. So it's going to be a pretty quiet U.S. session. In fact, most markets are closed. So what we're getting is what happened in Asia and Europe and continued follow through in the Dixie. I see no reason to try and fade it here yet. It's a little divergence happening up here. If you recall, a few weeks ago, the 2-month off number in the dollar is up around 91.80. So here we are on the daily approaching the 50-day. Okay, so we penetrate that. I'm actually looking for, like I've been saying for a few months, even before we had a bottom, that there would be some kind of bear market rally to 95. Starting to think that was it down here. So we had 2 decent weeks to the upside. I think another feature is what S&Ps did Friday, and unless it could recapture old support as new resistance. Remember, I was saying it looked like a descending triangle, and we did finally break down after a few attempts that it wasn't able to do so. So this is going to be resistance now, 37.84. So the off number is above it, and the NASDAQ is even a little weaker if you look at the 2 charts. Weaker response today so far in NASDAQ. And this is starting to have a look of a descending triangle right here, 750. And we start breaking down from here. There could be about 400 points to the downside, take us back down towards this low. Hi, Alexander Bruno. Nice to meet you. Everyone see that? And speaking of the yen, sideways correction so far. We weren't able to break out. We tried. It got right to the wedge line and backed off. Doesn't mean that it won't break out. But if there is some sell-off, 10% sell-off or so in the S&Ps, that's going to be the real test for the yen. So actually, when you look at the yen, which is a dollar pair, and the Dixie has a much better look to it. And commodity currencies finally broke down. Blake talked about this last week. Finally took out that neckline and tried it a couple times, but there it is. You could call it a head and shoulders. You have to protect yourself now on closes back over 71.5. But the commodity currencies were the leaders. Canada looks great. I thought I might have a chance to buy a pullback in Canada. If we can stall here and pull back towards 27,680. And the reason I think the low is in Canada is really this candle. So last week, this was a real nice squeeze, right? So everyone who thought maybe Canada had bottom, and I'll tell you up here, I thought it had as well. But then when we had this break at this candle right here, was just enough to elect the stops under this low. And, when you look at the RSI at the new low, it's glaring divergence. So I have to buy breaks here between, 27.10 if we get it when the U.S. market's open. And this is your best trade right here. I recommend getting long ForexAnalytix for 2021. Okay. You won't need a stop. and take advantage of this. I think there's maybe just a week left or so to take advantage of this offer to be with one of the hardest working teams in the FX arena. I mean, what you get for these prices, I think, is a great value. If you think I'm not being objective and subjective, you're right. But I'll tell you something, I've been around for a while. If you don't believe me, ask Blake. I've been around for a while, and I really don't know guys, really haven't met a team more dedicated, hardworking, and actually have a heart at the same time, that care about what happens to you as you trade, and take the journey of becoming a trader. So I would recommend you guys get long ForexAnalytix. Yeah, they are humble. Okay, so character counts. Okay, it's of course, performance is what everyone really looks for, but be careful about some of the performances you see out there. There are scoundrels out there in the business. So good morning. I'm so old, he knows what I do. I know what I am, a dinosaur. Ziggy, thank you very much. And so as far as the markets are concerned, continuation in the dollar. I really do not see any reason to fade the dollar at this time. There could be reactions. In fact, I'm hoping for a reaction to fade, because I don't think the dollar, I think the dollar has legs now. So we'll see. I don't think we're going to get that 88.5 level that a lot of the dollar bulls thought could happen. To me, it looks like that was it last week. I reserve the right to change my mind. But the action that we're getting right now tells me, it's premature to try and short the dollar. So we'll see how this week transpires, and don't make too much out of today's action because of participation and it being a holiday. And make it a holiday by becoming a member of ForexAnalytix. Yeah, don't make too much out of the moves, TJ, because all we're seeing is follow through from the rest of the world, and the US has not spoken. So we'll see what happens tomorrow. Okay, you're very welcome, everyone. It's our mission to build up and edify traders every day. We all have that mission here at ForexAnalytix. So give us a chance to prove to you that we walk the talk. And with that being said, Blake, how are you, my friend? How's it going? You with us?
Hey, good morning, Dale.
Hi, buddy. How
Hey,
are you? Kind of a quiet session when it's closed in the US, huh?
yeah. Well, I think it's interesting because people are wondering. Um, uh, okay, hold on, really quick.
Sure.
Give me one.
Yeah, go ahead. I'm gonna.
Yeah, just give me 1 second, okay?
Yeah, go ahead.
Thank you.
All right. So one thing that's interesting as well before Blake, while Blake has a few minutes, is I was looking at Euro Pound, and I was pretty bullish, and maybe I've given up on it too soon. But when I look at the daily, I mean, look at what we're hanging on to. Look at the support right here, and this almost looks like a breakdown, where we could maybe, I mean, if you believe this is a breakdown from say 89 to 92, it gives you, targets down around 87 or so. All right. So even though we're getting a little bounce, 2-day bounce here, I'm not bottom picking it. Okay. I think that we're going to end up with a continuation of trend in EG, maybe down to 87 or so. So what does that tell me? Even though today that's not the case, it tells me that the euro is still the preferred short over cable, even though cable's had a couple of negative days up here. So if I'm right about EG, you want to sell, and when you're bullish a dollar, you want to sell the euro, and when you're bearish a dollar, you want to buy cable. Okay. And oil actually, started to give some negative signals. I was hoping for maybe one more high and it didn't achieve it, kind of like the commodity currencies. But if we could get one more high up here in the crude oil, maybe that will generate the pullback in Canada to buy. But Canada looks better than a lot of the dollar pairs. And this to me gives me conviction. So you look for some type of pullback. Halfway is going to be, around 27.10 to get on board. Peter Goodburn was talking about 136 Canada eventually. So I think it's tipping its hand. And these breakdowns in commodity currencies, you say, well, I'm late, I missed the breakout. But, are you really late? Is this late? I mean, even to come back and test prior highs? Yeah. Double top? Yeah. So it's really not late in these commodity currencies, especially when you look at what they did on a longer term basis on weeklies, right? So if this is a top, there's no way it's late. Of course, you want to finesse an entry if you didn't do it last week. But I see no reason why we can't pull back to this breakout area over the coming weeks, 68 or so. And I know some people that are looking for a similar number, actually 67 in the Aussie. So this isn't late either. In fact, this could be the first week we get a 2-week reversal if we close under 77.59, which is 80 pips above here. So that's, it could just be beginning. And the yen's going to have a test. It's tough to get bearish yen, even though we've yields have pulled back quite a bit. But, there's nothing here besides maybe an ABC before we get another wave to the upside in yields. I mean, this looks pretty convincing, doesn't it? I mean, after being in a coma for a long time. So I'm thinking after a pullback, there could be another one of these to come. And if that's the case, then the yen will break out over that 104 area.
Sorry about that, Dale.
Oh, no problem, man.
Oh yeah. So I'm sorry. I was kind of lost in what you were talking about there. I was just typing a couple of things. So how are you?
Okay.
It's a little quiet today. Actually,
Yeah.
Steve didn't even know it was the Martin Luther King holiday. I mean, it is in American history. Martin Luther King Jr. was I mean, he is probably one of the most historic,
Civil rights leader. Yeah.
and civil rights leader in the world, really. And so it was, interesting. For many years, the state of Arizona that I live in didn't even recognize Martin Luther King holiday. So when it was a holiday everywhere else, as I was growing up, it wasn't recognized here in Arizona. It was, and other people would have the day off, and I didn't get it as a kid. I'm like, huh, but yeah, it's a holiday that is observed by the United States, but it's not obviously it's not a holiday that everybody knows about around the globe. So, like Steve was like, huh, there was a holiday today. I had no idea. So,
Yeah.
but that is going to lead to some lower volatility. We kind of saw out of the gates, the markets moved a little bit, following the open. And, there's one thing that I want to point out here. Let's see, you guys should be able to see my charts. There's a few developments that have taken place. One of them is with the dollar Canadian. You can see the dollar Canadian ripped higher as there's murmurings, and it seems like that Joe Biden's going to cancel the XL Keystone pipeline. And so that's a big deal because, Democrats notoriously are more for the, preservation of the environment. So this could be a really big negative for the Canadian currency if indeed the Keystone Pipeline is canceled.
Huh.
So we got to watch the dollar Canadian as we creep up here. There's a good chance that we can blast right through 130. The double bottom already points that direction, but we have to be really paying close attention to it, because what happened is when we kind of gapped up after that news, we went from 127.40. You can see it right here. We went from one.
Oh, that news broke last night, Blake.
What's that? Yeah, that news broke last night. You can see when we busted higher from 127.40 to 127.70, we've basically just held those gains since then. And so that's, pretty big. And since I've got the dollar Canadian up here, what we should start looking at for resistance right now is this 128.30 level, which is the 618 retracement. That was obviously the high there, but if we can take that out, that means there's a double bottom, and that should take us above 130. So I am going to right now write down 129, or I'm sorry, 128.30. That is a big resistance, and you notice how we've taken the dollar Canadian off of bearish, at this point we have for the last couple of weeks, because
what convinced me, Blake?
This bottom. What's that?
What really kind of convinced me was that last shakeout candle that took out the stops before the rally we had last week with right there.
Yeah, exactly. Yeah. And we really, just try to take out. Well, it actually matched the lows at that
on my platform
30, but I mean, it was within pips, but
okay. Yeah.
I mean, it was enough to really, I was watching that sell off, and I wasn't, let me take that back. I was long a little bit, but I was looking at it going, man, I don't know if I should really be long this. And it was a small position here, because me, I've been, for the last couple of weeks, I've been playing this range bottom. So every time we've, once we came out of this channel, and then we came out of this wedge, I played it on the long side. We dipped back to the trend line, and I got long a little bit here. And now I actually just want to add aggressively to long. So, but as we were pulling back towards that support, I myself was like, I don't know if I should be, long this anymore. But we reversed quite nicely, and the potential for stocks to come off at current levels is a little heightened. So, if we do see a little bit of risk off, we see, let's just say a 2 to 5% retracement or pullback in equities, that should spur some dollar strength across the board. And so this is one of those places where we should see it. I'm going to look for dips back to 127 as being supported intraday, just in case we should get back down there. But let's go ahead and kind of go through the bias chart here. So the euro, we have our AB equals CD move coming up, and that the completion there takes us to 120. Now you can see we have a longer term trend line. Actually, this goes like this.
And you were calling for this last week, Blake. So, our listeners, our viewers, we're aware that there was more weakness to come in euro from our commentary.
Yeah, I think if you guys were here last week, you knew exactly, what I was thinking, and I was looking for this, continued dollar strength. We've played the dollar on the long side in several different ways, but this, the euro dollar, I actually was short the euro. I actually got wiggled out right here, which is fine. I'm long the dollar against other things now, but I got wiggled out right there because I thought that might have been a false breakdown. But to complete this move is 120. I actually think that the euros, you're going to see a lot of buyers at 120. Whether we stop there or not is not, as I said on the, I think I said this on the week ahead video, excuse me, is that it really depends how we get there and what we're doing as we get there, for me to make the determination if we're going to go further or not. I think that there are risks that we do drop a little further than 120, but it kind of depends on what's happening once we get there, if we get there. And that's one of the benefits of being in the ForexAnalytix chat room, is because you'll have access to myself and the rest of the team, and you know, as the market is open and we're getting down to those levels, we can make that determination whether we're going to be picking up the euro or not, or, you know, trying to let it, you know, see if it'll sell off a little bit further. But anyway, okay, let's write down 120 as being support right now. Resistance should be 121.50 on any rally. So and as you guys know, I'm keeping the bias range, even though I do feel that near term it's bearish, but overall the trend is still very bullish. But as I have been explaining to you guys, there's so many people that were long, or excuse me, bullish the euro dollar at the end of the year, that, you know, it just made a lot of sense that we were going to turn, and we have obviously. The cable, so the pound's pulled back to the 78% retracement. I still think the pound looks pretty bullish. I know it's, you know, we got this little double top or maybe even triple top setting up, but overall the cable is holding up a lot better than most currencies right now. So I think 135 should be support. Any rally back to 136 should be resistance. I don't think there's a whole lot to do here. Oops. Aussie dollar. So here's the Aussie. False breakout, throw over. Dale's famous throw over pattern in the Aussie above channel resistance. We had a triangle, failed breakout, lower high. Now we've slumped all the way to the channel. You guys, I mean, I've walked you through this for the last week and a half. You guys knew exactly what was happening here. This is not, none of this is should be a shocker to what's happening right now with the Aussie. All right, now we are threatening channel support. So, you know, we start breaking below 76.50, and, you know, you're going to see selling intensify. Any rally back to 77.20 should find sellers now. That's pretty key level support. That would flip us to, from range, I think, to bearish near term if we break through, especially like this breakout point here. So if like we drop through 76.30, we're gonna have to go bearish near term because of the false breakout. I'm not there yet, but I'm getting close. Kiwi, head and shoulder pattern. Yeah, I'm short Kiwis. What's that, Dale?
Perfect.
Yeah,
it's like, I mean, a textbook.
It is. I you know how, and I'm sure,
I know,
and I know you feel the same way. Textbook head and shoulder patterns are like,
yeah. Or the shoulder turns into a giraffe.
I'm never ever comfortable trading a head and shoulder pattern. But this one is a pretty textbook, because head and shoulder patterns are not continuation patterns in my book. They are reversal patterns. So if you have a strong uptrend, in this case, then you see this head and shoulder pattern. It is a reversal of this uptrend. So I am bearish near term. Should take us back to 170. Okay, or 70 cents, excuse me.
Yeah.
Any rally to
or 70. A bigger head and shoulders.
Yeah, I mean, hey, hell, you never know. I mean,
yeah,
you could end up trying to build this over time.
Yeah.
You know, it's hard for me to make that determination right now with as much inflation I think is building.
Yeah,
Near term, it's hard for me to kind of make that judgment at this moment, but you never know. I mean, it's possible.
Yeah, that would take it down to about 67 if that ends up down the road months ahead of time. It does, anyway, just looking ahead.
Yeah, I mean, it's
too far ahead sometimes, bro.
Yeah. I try not to get too, I mean, that could be like, I mean, we're talking end of 2021. So a lot can happen. A lot can happen in a year. So we found out last year.
Yeah,
right?
We sure did. Yeah.
All right. 7150 is resistance. The next level supports the 78% retracement, which would be 7066. So we can write that down. Obviously 70 cents of support. Then we have 7060, and then 7150 is resistance, and we are bearish near term because we are in a head and shoulder pattern, and it is working. And so now you have to imagine that any rally back to 7150 should find sellers. We could actually make it even to 7460, 7470, just a little past that neckline. But I think that's what we're looking for there. By the way, let me stop here for a second. You guys that are, I know I mentioned this last week, but I'm going to mention it again right now. If you all are ForexAnalytix subscribers, thank you very much for your support. We do have our special pricing that is happening right now. We offer this. You guys have been watching us for the last several years, maybe 3 times a year. We offer this level of price discounts. So take advantage of it. And the reason why it's so important this year or right now is because the face webinar, as you are watching it, will change at the end of the month. So at the end of the month, you guys are watching me do this bias chart. I will not be doing the bias chart for you guys for free anymore. And it's not for any other reason than we want to make sure the ForexAnalytix subscribers, I do this bias chart because I do it because it sets me up for my trading day. And I want to make sure that all of our traders, I'm not breezing through this as quick as I have been going the last couple of weeks that we've been doing it, or last couple of months I've been doing this with you guys here. I want to make sure that I answer your questions. We go slowly. I can tell you why, it's so important that we're looking at, this key level of resistance versus me just, running through here and going, all right, well, here's the US dollar Norwegian krona. Yeah, we're up here against resistance. That resistance is at 865. It's a big deal. Well, why is it a big deal, Blake? I don't know. I got other stuff I need to cover really quick, but we break above that 865 and it turns bullish. Well, that seems like pretty important information, doesn't it? Well, yeah. So I'm going to have to take a little bit of time to explain to you why that's so important this time around versus, the last time we were up at these levels. So, support here for the US dollar Norwegian krona is 853. Oh, well, why was it 853? Well, because it is important. Oh, well, why, Blake? Well, I just don't have time to answer those questions when I'm trying to get through this. So Steve can answer your questions, or Steve can give you his take on the markets. Same with Stelios, same with Grega when he's here. So in about 2 weeks, face webinar is going to be an hour. You guys still get your interview with Dale and his guests that he'll bring in. You'll get my quick market views, same with Stelios, same with Steve. And then the hour after that will be exclusive for ForexAnalytix subscribers. So take advantage of that. Make sure you join the ForexAnalytix community. And you don't have to be a premium subscriber. You could subscribe to the light version for it's $19 a month, and you get a mobile application, and you get alerts on your phone, and you get to listen to all the webinars that we do exclusively for the ForexAnalytix community. So, and at $19 a month, don't pass that up. And then also if you can get the premium, why not do that too? All right, guys, back to the analysis. So US dollar Canadian, we went over it. Swissy. So obviously with the dollar Swiss, we wrote down last week 89.20, right? I'm pretty sure we did. Let's go check. So the bias chart from 89.20 with multiple asterisks. Oops. Let's see here. Give me 1 second. And you can see how important that was, right? 89.20, just rejecting. So we're going to put 89.25. Beyond that, 89.90. Support, 88.50. We already got the US dollar, Norwegian krona, dollar mex. Nice little squeeze. You guys know that this is a Wyckoff setup. Mention that a lot. I am long dollar Mexican peso. Most of you know that. You know, at least if you're in the, you know, Forex analytics community, you know, I'm long the dollar Mexican peso from, you know, I've bought it a couple of times. So support 1970, resistance now. Resistance is at 20. It's a 618 retracement. So if we break above that, we're going to 2020. Okay, so 1970 range. Dollar yen. Oh, once again, I'm glad you guys are trading it and not me. So you guys know I joke about that, but I really don't, because it's like I really have no idea. And I think I've said this every day for like the last 2 months. I have no idea what's driving the dollar yen right now. I just don't. Sometimes it's yields. Sometimes it's risk off. Sometimes it's risk on. Sometimes it's Steve's mom. I don't know what's driving it. Just kidding, Steve. At least I got Stelios to laugh. All right. It's yo mama jokes.
I will laugh at anything.
I know.
Is that the objective up there, Blake, with that blue line?
I mean, I would think that this is the breakdown point with the with the dollar index. I don't think we're going up there today. Yeah. The 38% retracements right here at 91.05, and you can see a spike high here. You can see how we struggle around there. So I would say 91.05 before we go to 91.60, but you know.
That's right near the 2-month reversal number, which is around 91.86, I believe. So
yeah, I mean, all of this big,
I see
big previous support, you know, I mean, it's all coming into play right now. Dips to 90.60 should be supported intraday. Let's quickly go over gold, which is not, it's still in our, you guys know where gold's, I think we could write down the numbers, but oh wow, I didn't know we spiked all the way down there. When did that happen? That happened overnight? It did. Oh crap. I didn't know we go, I didn't, that's interesting. That might be a little false breakdown. So I'm still concerned with 1820. I didn't know we dropped down to 1802. That was really crappy liquidity that happened. Look at that.
Yeah, look at that one candle.
That's Stelios to tell you stories about that type of stuff, right?
Yeah, ghost candles.
Yeah.
Yeah, magically crap liquidity leads only to spikes to the downside for metals. Now, you can wonder why.
Yeah, I mean, they're constantly searching for stops. And I mean, precious metals are bullish.
Long cheaper.
What's that?
It helps them get long cheaper.
Yeah.
It's almost like they take it down so they could buy it, you know.
I still think gold looks, you know, constructive.
Heavy. Oh.
but I don't know. I mean, I'm not trading it right now. I mean, aside from my physical silver that physical silver and gold that I own, I don't trading it. I'm not really too sure what to make of it right now. Although longer term, I still think it's going higher. S&Ps. So here's that 38% retracement we talked about on Friday. Notice how we pushed below it and actually closed below it on Friday. Now we might find some resistance here in the next 15 S&P points. I'm going to write down 3790.
Yeah.
And support is, we have this 3750, but I want to give it all the way down to 618 at 3730, roughly. And we have flipped from bullish to range now that we took out that 38% retracement. And you guys, I told you on last Friday, that's what I was going to do. So I'm finished. Here's your bias chart.
Nice job.
And I'm going to pass it over to my colleagues, Steve and Stelios. Good morning, guys. And
Morning,
obviously,
mate.
Good morning.
it's just with me. I'm just passing it over to those two guys since they haven't been here. Good morning. Steve, did you know it was a vacation today?
No, I hadn't realized that it's Martin Luther's.
No,
working
it's
day today.
really, we have a holiday today, but I'm actually taking a vacation today.
Yeah.
Yeah.
Okay.
Done,
Nice.
Steve is like the Martin
Guys,
Luther
enjoy.
King of Greece. Did you know that? Everywhere he goes, he spreads peace. He's a peacemaker. Right, Stella?
Yeah, I'm not so sure about that, but yeah.
Not so sure either.
Cool.
All right.
Well, thank you very much, Blake.
Guys, I want to thank everybody for tuning in today. I know it's it's a holiday for a lot of people. I know there's a lot of people that aren't in front of their computer right now, and for good reason.
Yeah.
The market's not doing a whole lot. I think a lot of people probably got up, like I did this morning. I got up and I looked at prices, and I'm like, they're not.
Why
much
don't I
different
go
than where
back to
they
bed?
were when I went to bed. So I'm sure a lot of people just decided to go back to bed. Me, obviously I've got to be here. So, and no, I'm not going on vacation today. I'll be here all day. But you guys have a great day of trading. I'll see most of you on the daily roundup webinar in 4 hours time. So Dale, Steve, Stelios, thank you guys. And it's all
Thank
yours.
you, Blake.
Thank
Bye-bye,
you.
mate.
Thank you, Blake.
You guys.
Good morning, guys. And
Good
hope
morning.
everybody's
Hey,
well.
Stel.
Hello.
What's up, bro?
Pretty cold here, but as you know, but
Finally.
next few days is coming back to normality. But all is good. It's been a very quiet morning, as expected. There's not much happening because of MLK. And I have a couple of things to mention. First of all, we had the Chinese GDP printing going back to, let's say, normality. They said that, and I stress that word. They said that their economy is growing on a quarterly Q-on-Q 2.6%, year-on-year 6.5%. So basically,
Sure, why not?
we're back to where we were pre-COVID, which was in the 6-ish% area.
Sure. Absolutely.
Hey, come on, no, we believe them, and so, and actually, if you follow their reports of COVID cases and deaths and all that, they've gone down to nearly zero, right? I mean, compared to other countries, they've done very well apparently. So if that's true, well done to them. I mean, they really got on top of it. So that was the main economic release. We had a couple of other things, but really nothing worth mentioning. We did have also in Germany the successor to Angela Merkel. There was, I can never remember her name. It was a German woman who's tipped to be her successor. I remember
Yeah, but
that
went
kind of,
down the drain, yeah.
Yeah, fizzled out. And Armin Laschet, or however you call his name, won basically, and is going to be the next leader of the party. And theoretically, unless there's a big surprise, the next chancellor. And from what I read, he's very, very much in the same mindset. And strategy as Angela Merkel. So that should be good for the euro. You know, you have a continuation of the main strategy and the main way forward. But obviously, we wait to see what he's going to do. Obviously, if he gets elected. But that's first step is he won the party elections, and he's basically going to be the candidate for the CDU. There was one more thing I wanted to say, and I forgot it. Okay, it might come to me. I read that Janet. Sorry, somebody's writing. He's in the same camp. The CDU is now deeply split. Yes, okay. It's obviously not the same as it was a few years ago. The situation, I mean, and when we do get the next elections, it's going to be a lot closer and a lot tighter. But let's see for that what happens with that. The other thing I want to say is Janet Yellen. She was speaking somewhere, or was it an interview she gave? And she said, I caught the headline. She said that she's against a weak dollar strategy. And I'm like, yeah, how exactly are they going to accomplish that? Because they're just printing.
By printing more money.
And when she was the Fed chair, she definitely didn't do anything to make the dollar stronger. But like we were talking on Friday, when people are out of the job and they're from the outside, they say the right things. The question is, what do you do when you're actually?
I don't even understand why they need a Secretary of the Treasury anymore. I mean, they just have like 5 punchlines that they keep repeating no matter who is there, right? And then they leave everything else to the Fed, and that's it. I mean, a monkey can do the job.
Yes, exactly. But the Fed and the Treasury, they're completely independent, so we need to have both sides. What else is there to say? Nothing happened. I'm looking at markets and really very little moving. The dollar is trying to continue from the end of last week when it found some strength. And is it going to be something deeper or not? I always say when you see the market being one way, the risk. I think we all agree on this. The risk of a counter trade move is quite strong. And we've known for months now that the dollar just goes down, stocks only go up. So there is a risk for a counter trend move. We've said here on this webinar for over a year that we think that the dollar is going to be, the medium term trend is to be lower, and this is from the DXY in at around 100, I think it was, or 99 when we started saying it, and it's come down a long way. It could well bounce, and I wouldn't be surprised. Really, I wouldn't be surprised even if we bounce to something like 94, 95. We really could. And we've seen how these markets work and how when things turn and suddenly everybody's looking to get out of the same exit, things can get a little bit squeezy. So I really wouldn't be surprised if we see a dollar spike. It will be definitely a selling opportunity. But the question is, how high will it go? Will it go to 92, 94, 95, even further? I don't know. But I think 95 is actually quite feasible. Call me crazy, but I think it is.
Yeah, I mean, it's definitely
for the short term.
It's definitely achievable. Yeah, I mean, no question about it. I mean, we've had a very decent move from 103 down to 89, let's say roughly.
Yeah.
So back to 95 is it's a doable retracement. In my opinion, around 92, 92.50. Should also be an interesting area. So
yes,
but I mean, definitely the market can get squeezed, and something. So far, FX seems to be pointing in one direction, but the stock traders still are not buying into this. But we all know the old reliable quote that the bond investors realize things first, FX traders second, and the stock market is the last one to get the message usually. So let's see if that's going to be once again the case. I mean, S&P has had a couple of days of weakness. last week in general, it suffered a little bit of weakness, but if you look at the long-term chart, it doesn't even look like a blip.
Noise, yeah, exactly.
Yeah, but we still haven't even produced like a lower low. So, I mean, people that think it has broken down, no, that's not the case. But if the rest of the moves that seem to have started point that if we have a little bit of a continuation, I think that the stock traders might wake up abruptly and suddenly, and we might see some kind of a fast sell-off, because usually in these markets, we've said it multiple times in the past, what you have is like an almost constant, non-stop, slow bid to the upside. But whenever you have corrections, they're very sharp and they unfold very fast, and they get people, they get the stupidest FOMO people wiped out in almost zero time. So, you need to be aware of that.
That's very true.
But every journey starts with one step. And I would say that from last week, the first step was, closing under that 37.85 level that it held about 5 times if you look at it a shorter term chart.
It's true. Although it's it's indeed a very small step. So
it's a baby step.
It's a baby step. So you want to feel more confident, especially in a strong uptrend like this. In my opinion, we need to see a break below this trend line.
Yeah.
And even more importantly, like below 36.
Does copper look just like that, Steve?
90 roughly. Yeah, we were looking at copper last week. If you remember, I kept saying how important this market is to me, because you see the similarity.
Yeah, it's trying. Yeah,
it's trying. Yeah, it's striving to hold this uptrend, but it's clear, both from just eyeballing price action, but clearly by looking at the RSI as well, that something has changed here in momentum, right?
Right. Yeah.
So
they look identical almost.
Yeah, if you focus on the most recent price action, they look almost identical indeed.
Yeah.
So, and I don't think this is a coincidence, right?
Dr. Copper is a proctologist.
That's funny, man. That's funny.
You didn't laugh.
You know that there is no such specialization, right?
There really? Okay.
Yeah, there isn't. It's under
gastrointestinal.
Gastrointestinal, yes, gastroenterology, yes, indeed.
I know them too. Okay.
Yeah, I know you do. I know. I actually happen to know quite a few of them.
Yeah.
Most of them interesting people. So crude oil, also worth noting here, got rejected from this beautiful confluence of resistances there at 54. Now backtesting this broken channel trend line resistance as support. Let's see if this was an overthrow here. So I'm also keeping a close eye to crude. I mean, a lot of people have tried to fade crude strength in vain multiple times in the past. We remained all this time bullish crude, but as we started saying several days ago, the risk reward is not there anymore to be long. That doesn't mean that crude can't move higher, but it simply means that there is no more interesting opportunities to be long until we see a deeper correction. So could this rejection from 54 have been a short-term high? I think we're going to find out soon, because as you see, likely stars are aligning. I mean, we showed copper, we showed the S&P as the main representative of risk assets. Crude oil, we know how much it's being also influenced by risk of perception. So I do think that it's interesting that all of them, do give the idea that we might be about to turn a corner. Also, if you examine a couple of the FX pairs that traditionally have been sensitive to risk, it's interesting to see that the Aussie yen got rejected from this ascending channel trend line resistance, also horizontal resistance area. It's worth noting that the Kiwi yen looks to be breaking down from what seems to be an ascending wedge.
A lot of wedges.
Yeah, true. A lot of wedges have been developing. Some of them have broken out. Some of them have not broken out yet. And sometimes you get violent 180 degrees turns, but sometimes the market turns slowly like a tanker, right?
Yeah.
Could this be the case in this environment? I wouldn't rule it
Kitty
out.
thinks so. Yeah.
No, she's just bored of going around, so she wants me to open the door for her.
Because right after you said that,
because if you have cats, if you had cats, you would know that we serve them. They don't. It's the opposite with dogs. You know what I mean?
Yeah.
They're actually the masters of the house. You're not.
Yeah.
So those are the things that I'm mostly focusing on. Also, let me mention once again that I find it interesting that the cable got rejected once again from the same channel, but this time it was also confluencing with a 78.6% fib and this strong horizontal resistance area. I said on Thursday that the risk reward definitely favored short positions against that area. And I think that at some point, this orderly appreciation might become a waterfall kind of a pullback. So keep that in mind as well. So far, it has not been following euro so closely, which seems to be leading. This is also a reason why the euro pound had this rather strong move lower. It is worth noting, though, that once again, it seems to have stopped in this undoubtedly important support resistance area. You can look back and see how many times this 88.50 area has acted as a resistance initially when we were in this range, and following the breakout from there, it acted multiple times as support, and add this one so far to the times it has acted as support. So could this be an area that euro pound will rebound from once again? From a risk reward perspective, it definitely looks like an interesting trade. It is definitely a pivot area, and the risk reward is still extremely appealing. In essence, to assume that the cable is going to try to do some catching up with what the euro has done. What else having to do with USD NOK? I'm going to wait for the end of the day today, because today it seems to be now clearly trading above this channel. So if we do indeed close above this channel, I'm going to finally take some profits to my short position. I'm going to keep half of it, book the other half of it, because we might see like a stronger rebound, and more or less the same type of picture we have here in the case of USD CAD, right? Probably it looks like Kiwi. We can go to a shorter term chart. It looks like Kiwi was the first one to make the move by creating and breaking through this head and shoulders formation. So as it seems, perhaps among the commodity currencies, Kiwi had the lead. So let's see. It's likely that the rest will Follow. Steve, risk is still extremely bullish, continuing to buy the dip, but opportunities seem to be becoming fewer. Is this a sign? Yeah, listen, you need to keep respecting the trend, as I've said multiple times, and the fact that there is no alternative for governments and central banks to keep supporting this Ponzi scheme because everything will break down. But it is inevitable that at some point, I think in the not so distant future, within the next few weeks, we're going to get some very decent sell-off. I don't think it's going to be long-lived, but it has the potential of being sharp and violent. Because as I've said before, these are the type of pullbacks this type of market creates. Sharp and violent, but on the other hand, rather short-lived. They might last for a few days, worst case scenario, a couple of weeks. And no, I wouldn't be looking to buy the dip until we see that type of a sell-off, okay, personally. I've said multiple times during the past few months that you should be buying the dip, you should be buying the dip, you should be buying the dip. But I think we've gone past that now. Sentiment is extremely bullish. Positioning is extremely one-sided. Complacency is, sky high. So no, not the time to buy the dip anymore, in my opinion. Our friend here is asking about Nifty and backing Nifty. Listen, everything is well supported so far. So look at Nifty holding this very steep channel at all-time highs. Be careful though. We're getting closer to support. If we do break lower, we will finally see some type of a deeper pullback, but you should expect the previous high at 12,500 to be support. Bank Nifty got rejected so far from the previous high. Be careful here as well. Some type of a deeper pullback might be needed, and having to do with USD INR, we also see divergences all over the place in these indices and multiple indices, to be frank. And having to do with your question about the Indian rupee, where do I have it? Anyhow, let me type it in. Here it is, still holding this triangle, right? So, in wait and see mode still. Dale, do we have a guest, by the way, today?
No, because it was a national holiday. I didn't schedule one. Dana Lyons tomorrow.
Okay, nice. So let's see what other questions we have. Can we have a look at Hong Kong? I'm assuming that's HK50. HK50. Never ever drew anything on this, but you don't need to be some kind of an expert to realize that this was a very legitimate breakout, right? And it has gone vertical. Still no real divergences. I think it looks bullish. Now, yeah, recent price action is really, this was a textbook pennant, right? Pennant, flag, depends on how you want to draw it, doesn't really matter, but it was textbook. I mean, this was textbook continuation formation, no matter how you draw it. I think any pullbacks towards 27,000 should be bought, no questions asked. Bullish, right?
Yeah.
Bullish. Can you have a quick look at SPG in particular, please, Steve? SPG, what is it, SPG? But other than self-propelled gun, which is a military term, what is it? And compare the other two rates. SPG. This one? Simon Property Group.
Yeah.
Oh my God.
Good.
Oh my God.
The REITs, yeah, that's probably office buildings.
Yeah. I know what REITs are, of course. I just didn't know the specific ticker.
Yeah.
This is so fugly looking. right?
Yeah.
Now, I don't know where it's going to find a high, but I can tell you one thing for sure. This thing looks really, really bad. Really, really bad.
Shopping centers, Tom's saying.
Yeah. It looks really, 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 really bad. It's extremely bearish. Now, it might top here because this is clearly horizontal resistance area. It might rebound further and do something like that. But in any case, this looks so bad. And since I know what it is, it's also fundamentally really not good. So yeah, you should be looking for areas to short this, and definitely not the opposite. I think in the grand scheme of things, this is a dead cat bounce more than anything. Question about the Nasdaq. Here's the Nasdaq. Guess what? Looks exactly like the S&P, right?
Yeah.
So I have nothing to add. Exactly what I said about the S&P applies here. Same type of formation if we're talking about the shorter term. Decision time, decision time, decision time.
And you have a request for Bitcoin, Steve.
Sure, absolutely. Yes. Why not?
That could wrap it.
And there it is. This is what I think is happening with Bitcoin. I think it's more or less clear.
Yeah. Triangle.
Most likely triangle, because keep in mind that corrections, as I've said probably 1,000 times, are very hard to predict how they're going to unfold. It looks now like a triangle. It might prove to be some kind of a flag, with a different trend line as support, right? But extremely likely that this is a bullish consolidation that's going to be resolved with one more move to the upside, which, if this indeed proves to be a triangle, which is a very high probability scenario, I would expect the next move higher to be terminal. I'm not implying that it's going to be like the high, the all-time high forever.
Forever, yeah.
Yeah, but I'm implying that it's going to be like the final move before a probably much, much deeper and needed corrective move lower. Okay. So that's what I think about Bitcoin. And if you look at Ethereum, it more or less looks the same. I know because I worked on these charts. I think it was yesterday or Saturday, something like that. Okay. Look at silver. Yeah. And we wrap it up with silver. Listen, nothing has changed with silver, meaning it's still holding the attempts to backtest the broken channels, trend line, resistance and support, although
it looks so much better than gold.
It does, although if you look at the shorter term chart, this was a textbook pennant, which did play out. I mean, if you traded this breakout from the pennant, you would be in a position that you would be able to manage and not lose money after that with this spike that we had lower. But technically speaking,
I'd guess one more spike. We have two.
Technically speaking,
just a guess.
It's far away from having reached equality, right? Of the two legs.
23.
Yeah, 22. What is it? 22, 27. Yeah. So, looking at the short-term chart, doesn't look this healthy. So in my opinion, and here is gold on the 4-hour chart, in my opinion, both of them have the potential for more downside in the short term. Having said that, there is absolutely nothing that has changed my bias having to do with the medium to long term in precious metals and anything that is not printable by the central banks printing machines / computers, of course, because the vast majority of what they print is not even on paper anymore. And I do think this is an amazingly positive environment for precious metals. So in my opinion, it's a matter of where we find the low before we push much, much higher, and not if we find the low before we push much higher. Okay. So
Thank you, Steve.
check the DXY and the USD CNY. We did have a look at the DXY. And I can tell you very briefly, and we wrap it up, that nothing has changed in the USDC and Chinese yuan, meaning it's still in this prolonged downtrend. Look at this channel, holds up beautifully so far. It is rebounding, but it hasn't broken higher yet. Right, so until it breaks higher from here, you need to respect the downtrends. Okay.
And that was from Ronit. And thank you, Steve. Great review.
Thank you, Dale.
And we'll see everyone tomorrow for Turnaround Tuesday, although it'll really be like the first day of the week here in the US. And want to thank everyone for their attendance. We hope we add value to what you're attempting to accomplish as a trader. And that's a wrap. Remember, don't just count your pips, count your blessings. And it's our mission to build you up and edify you every day. Hope we did it even on a holiday today. So
Thank you,
that's a
everybody.
wrap.
Thank you, Dale.
Yeah. See you tomorrow, buddy.
See you
Or
tomorrow.
later. Yeah. Or see you later. All right. So thank you, everyone. See ya. You're welcome, Georgie, Mateo, Sansi, Alexander, all you guys, Brock. You're very welcome. See you tomorrow.